On to the ET Money Show, and let's talk about personal finance. Whether it's education or finance, every day is a good day for learning. And therefore, today on the ET Money Show, we would share with you the success recipe of top fund managers across India. Because when it comes to investing, there is a method and philosophy that guides the investing strategies of the best in business. Let's bring you. Let's get Arnav Pandya, founder of Moneyeduschool, on board to talk more on this. Arnav, good evening and welcome to the show. We're going to talk about the best and hit fund managers whose fund strategies have not only helped investors plan their finances better, but also have made them able to achieve all their financial goals and financial freedom, which is one of the biggest goal of every investor. All right, so what is there on your list? Which is the first name that's there in your list, the fund manager and the strategy?
So we can look at various fund managers across various fund houses, and each of them have their own way of dealing with their investments. So the first fund manager whom I would like to pick is R. Srinivasan. He's from SBI Mutual Fund, and there is a very clear strategy which he has been following over the past so many years, and which have translated into the returns and the deliverables for the fund. But just one thing before I start, which is that, see, any strategy which every fund manager adopts, it does not work every time, in the sense that there are always periods of underperformance, and then there are periods when these strategies actually work and the returns come in. So one has to keep that in mind. Now, shifting our focus to R. Srinivasan, see, the basic theme which he follows is that he looks at growth with quality, which means that he selects stocks which are able to grow, but these are high quality companies. And one important philosophy which he follows, that he doesn't put too many stocks in the portfolio. So his thinking is that you do not need to over diversify, because according to him, if you look at any financial theory, the moment you go after 15 stocks, the impact of diversification goes down. So in effect, having a concentrated portfolio of say 25 to 30 stocks is not necessarily a high risk situation according to him. So he prefers
About
to
for
do.
Mr. R. Srinivasan?
Pardon?
So what funds are we talking about that he handles?
So he has handled the SBI Focus Fund, which was which is a very focused fund. Earlier, he used to handle the SBI Small Cap Fund also. So if you look at it, his other strategy is to buy a good business which is managed by excellent people at an attractive price. So this is the key part. Buy a good business. What does a good business mean? It means a company which is competitively advantageous, which has a high return on capital, plus it has to be managed by excellent people, which means that the management of the company has to be reliable, it has to be believable, they have to have integrity, and finally it has to be an attractive price, which means that you do not pay more than what it is worth. Now that is his secret, to ensure that if you do this regularly, then you can see the results, and which has been seen over a period of time in the funds that he manages. Now obviously he's in a bigger role in the mutual fund, and which is now today India's biggest mutual fund. But one has to keep in mind, this is the strategy that he follows.
The next name on the list?
The next name would be S. Naren, who again is in charge of the investments at ICICI Prudential Mutual Fund. Now, he is a value investor and he is a contrarian investor, which means that he looks at stocks and companies when they are out of favor. So this is another way of investing, wherein you look at beaten down areas, you look at companies which are good, which have a strong fundamental basis, and then you add to it. The risk to this, which he admits, is that there can be a long period of time before these companies actually show results in terms of a rise in the stock price. So that is where the actual patience comes in, and this is the challenge of following this kind of contrarian behavior. But he has consistently stuck to this, and that is seen in the kind of results that the funds which are run by his AMC have been able to deliver. The second thing is that he has also a keen focus on asset allocation. So ensuring that you have the right asset allocation is very important in your portfolio. So it's not just about one asset class like either equity or debt, but having the right mix according to him is very important. And
Third name, because
the
we are
key part,
actually running out of time over here. So which will be your third name? I can see there are six you have in the list.
the third I would say is Pankaj Tibrewal of Kotak,
Mm-hmm.
who also runs the mid cap and the small cap fund. So
Sure.
his is very simple: get good business which has a strong management, look at the balance sheet, look at the cash flows, and ensure that there is a proper valuation. So safety in valuation in terms of having a margin of safety in terms of buying at a lower price when the valuation is low. And one important thing which Pankaj Tibrewal also says is that there is another angle to investing, which is that you have to have a mental state which is calm, so that you do not get taken in by all the hustle bustle and the trends which are going on in the market. So he advocates that it is very important for you to be self-aware and ensure that you are able to stick to the principles, because deciding on the principles is one thing, but then sticking to them during tough times is the really hard part, and which is also a very important thing that one has to learn from these fund managers, because going through a bad patch and then sticking to your conviction through your policies, that is what actually helps when things turn around and it starts getting better. So this is Pankaj Tibrewal's
Yeah.
entire philosophy of
Right.
managing stocks.
Okay. Next, I think you have Rajeev Thakkar on the list.
Yes, Rajeev Thakkar, who's from Parak Parik uh, Mutual Fund. I mean,
Mm-hmm.
he is a very clear idea in terms of being able to ensure that value investing is high on his priority. So he believes in the quality of management, he believes in the quality of the business which one is investing into, and his main thinking is that you have to estimate the intrinsic value of a company and then buy it at a discount. So remember two things: valuation of the intrinsic worth of a company is important, because if you are not able to get the true worth of a company, then as an investor you might end up paying any price for it, and which is where you are likely to get stuck. And second, once you have an intrinsic value given to a company, you go and then buy it when it is at a discount. So he also he's very clear that one has to build a track record, whether it is the management, whether it is a company. So he wants to see a track record, and only then he's willing to trust a company and its management in terms of it being able to deliver over the longer term.
Last name on your list is?
Neelesh Surana of Mirai
Sure.
Asset Management Company. So his philosophy is simple: you have a well diversified portfolio, because his belief is that a well diversified portfolio will take care of the tough times when there is a downturn. And what does well diversified mean? It means that you have to be diversified across sectors, across style of companies, across themes, across stocks. So this kind of diversification is across so many areas, which is important. And he wants to avoid big mistakes. So the thinking is that you avoid big mistakes, that itself takes care of half the problem, because then
Right.
you have given yourself a better chance. So quality at a reasonable price. You will find that most of these fund managers look at quality companies, look at good management, and they look at a reasonable price.
Which is
These
why they are
three.
the star of the fund management business. Thank you so much, Arnav Pandya, for being on the show and helping our viewers understand this aspect of managing money.